afternoon, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, December 21st. Guys, nothing going on here. Very, very quiet. We're in a range-bound mode. Obviously, we have the holiday week, the Christmas holiday in the United States and all over the world, and of course, the holiday season. So we're really quiet. We are and should be getting some tax selling probably going into next week, I would say. I'm surprised we haven't gotten anything other than a continued slow grind higher. So the day trade, you're going to have to really look for it. We got a couple emails on, if the indexes aren't doing it, what do you look for? And I want to show that to you right now. Now, there's also, 6,000, 7,000 stocks out there, so you're not going to catch every one of them. And if you really are an index and you like to trade the indexes, it is a little hard to start going into individual stocks. If you never traded individual stocks, they do have their own characteristics. I will tell you that. But when it gets really slow, and then you're waiting patiently as a professional would, and you get range-bound days like this, so you start looking for upgrades, downgrades, and of course earnings. But we're not in earnings season at the moment. Do you see the earnings that, let's say, if a Facebook or an Apple obviously affects a multitude of indexes because of the fact that Apple is weighted in the S&P 500, the Dow Jones, and certain other ETFs, right? Technology sector, the technology ETF. So what I like to do is, if we're really quiet and you're still working, right? You still need to work behind the, behind those screens. Start looking for stocks that have, some sort of momentum. Or sector rotation. There's a lot more involved in a short video I'm not going to get into, but what we do at TMT here, we like to show our students, what would happen. And this is yesterday. This is a 5-minute chart of the spiders. There's absolutely nothing going on here, right? And also the last several days there was nothing going on. So I had seen, you see like an NVIDIA, right? So we pointed out NVIDIA had this explosive move. It's been on a tear for many, many months, but it's got a 100 handle now, right? It's at above par. And if you see something like this and you got your first 15-minute range and, you have extreme momentum to the upside, real strong momentum, you can literally come in and look to buy NVIDIA. And this was a classic example of a thrust out of the 15-minute range, first pullback, and that's what I keep saying, right? That's the high probability trade. Something like when you come into a range. Now this is the close, right? But if you come in, the first 15-minute range is right here. You pull into the range. The next candle, you come back out of the range. You could put a buy stop right up in here about 150, or you wait for the next pullback because that'll give you the higher low. Whatever your strategy or plan would be. At least you have momentum to the upside, right? You ask the question, which way is this stock is going? And you could see clearly this was going to the upside. So, and then yesterday we had another big pop, but we did nothing here yesterday. But so, you got to look at the different sectors and look at the sectors that you like to trade, because there's many sectors that, the builders, home builders, the banks, a lot of people like to trade at. But remember, whatever you're looking at is tied into some sort of an index, or fundamentally like an interest rate. If you're looking at banks, you got to watch the bonds and you got to watch rates, because that's going to affect the trade for the day. Okay, so just keep that in mind, guys. Just a little excerpt somebody had mentioned on an email. How would you look for some stocks? And I just wanted to show you what we did here. Okay, next, take the 5-minute out. Let's get right to the charts, and we have the UUP. And remember, guys, I said this is for real. Remember, if you looked at my videos, go follow on YouTube back here in July somewhere, I said, don't count this out. This is the higher low from the previous low, and I do believe that we get a big move up. Right now, no one cares about a strong dollar, right? But the multinationals are sweating right now because they're not making any money. They have currency headwinds that are happening at the moment, and eventually this is going to take hold and take into play. Why is this moving up? There's a lot of reasons. Most is really the safe haven, parking money at the buck, right? And, you have to put your money somewhere, and I think money's going into the dollar for a safe haven trade. That's going to be the number one reason. Next, TLT. I'm watching TLT because I'm really starting to like this to the long side. I think bonds have made rates have made a generational low, and I think it's here to stay. But this is what I say about when you're looking for something like this. You wanna look for base building, right? And then you need to wait to take out that base. You need to take out that current swing high here, in this case to the long side. If you take out this current swing high, let me just move that down, Then you wait for that pullback, and that pullback will give you that high probability trade down here. So that'll be the higher low from this previous low, and of course it would alleviate the bearish symmetry of lower lows and lower highs, right? So then that's when you start looking to build a position. Look what happened here, right? We had some base building. There's that little swing high, right? That little swing high right here, and what happened? It went the other way. It broke down miserably. So that's why you always have to wait. You do not want to catch a falling knife, and this is exactly what I'm talking about with gold. Okay, GDX, same thing, right? GDX had a big base building. Again, guys, this is our premium video for our subscribers. I just want to show you. This is a daily chart. You got to see the intraday charts that we put out our levels for. It's bar none. I really suggest you check it out. Go to tradingmarkettechnicals.com. Click on the videos tab, and down you'll see a drop down video, and click on premium video. Take a look at it. There's a little video introduction over there, but really, really highly reliable. And you can see here we had now we have another base building, and if we take that down, I'm looking for a 17 print. All right, that's where I'm looking for. All right, and I think we're going to get there. I think we're going to get there. But that's how we like to trade reversals. Okay, you got to build a base. You need several days of base building. And here's the GLD. Right now, GLD is failing miserably, and I think you probably get to 105 in GLD. Next is going to be the spiders. What can we say, right? The Trump rally all the way up. Dow Jones put in almost about 1,700 points in a month's trading. That's pretty much a year's worth of gains. It's absolutely insane how this market is working. But hey, don't fight the trend. Whatever it is until it changes. Guys, don't. Conversation-wise, yeah, I talk about it all the time. The market's crazy. I've never seen a market 29 years doing this. But again, it's not what I think. It's what the charts are telling us and what we have to trade. Okay, here's the spiders. 223.50. That's the 20. And then we're going to get to the lower end of that big bearish rising wedge. And that's going to be that next spot right there. And that coincides nicely with the 50-day moving average of 219.91 spiders. I wouldn't look for much movement between now and the end of the week. We do have our head and shoulders that we identified, right? It's only bearish, right, when it triggers, when it breaks the neckline. Right now it hasn't done so. So we want to wait and see if this thing does pan out. Obviously, if the right shoulder continues long enough, long in the tooth, I'm just going to cross this out. But right now it's still the valid pattern. Right, it's a valid setup, but it has not triggered yet. We're looking at 220.75, and you can see here on our premium video, you can see that coincides nicely with the gap up. Okay, that's going to be that first gap up area. Okay, we'll see what happens, guys. Next is going to be the IWM daily. Again, this is from off our premium. I want to just show you guys, give you samples of what to expect. This is off the daily chart, and these patterns, these areas are very reliable. And they hold true, especially off the daily chart. So take an eye on this. Keep an eye on the IWM, making some sort of a double top. Let's see if it forms an M-type formation. Back down again. That'll give you the M pattern with the neckline down here at 134.87. And last is going to be a Qs. We identified a nice bull flag here. We're still within the bull flag, so we just need to see what happens today, tomorrow, and see if we can break out of this bull flag. Have a great day, everybody. The videos will probably be limited because we're getting into the holiday season, and I'm going to put them out there as I see fit between now and next week. It is kind of quiet, and I don't want to sugarcoat anything, but don't push it. If you had a good year, your book pretty much is closed, I would definitely just do limited trading. You don't want to get caught. Have a great day, everybody. We'll see you tomorrow.